What's up, everybody? How's everybody doing today? We're gonna get started in a few minutes. Let a couple other people log on. If anybody has any questions or wants to talk or anything, feel free to ask any questions. Thanks everybody for joining. We should be starting in about 1 to 2 minutes.
Thank you.
You're welcome. How are you today?
I'm doing great. Thank you. Thank you for doing this.
Oh, you're very welcome. Hopefully you guys learned some good information. It's interesting, right? Pricing your loans and compensation, all that stuff changes along with the times, right? Obviously, the market and market conditions all impact that. So I'm excited to shed some light, share some experiences, and hopefully everyone can leave this call, very upbeat and optimistic about your earning capability.
Good morning, Jeff.
Yeah.
Thank you so much for your fast response.
Hey, you're welcome. Thanks for joining us. This is your first time, right?
Yeah, first time I joined.
Very, very nice. So just so you guys do know, if I get a phone call, I have a deal I'm funding. I took it yesterday at noon, and I'm trying to close it literally while we're on this call here. So if I pick up the phone, I apologize in advance. It's just very time sensitive.
No worries.
All right, guys, we should be able to get started now. So I know more people are going to be logging in, but that's fine. So today's seminar, today's Zoom at noon is about loan officer compensation. Loan officer compensation obviously directly impacts you, it directly impacts the bank and the consumer. So how you price your loans, how you set your mindset, will be the difference maker really in how you succeed and how quickly you succeed, and also how you adapt. So before we get into the crux of it, understanding economics, right? Understanding how business works, understanding what expenses are, understanding what it takes to not only have a banking license, but to also close the deal and post-closing are very important. So, there's so many different factors that go into originating a loan, processing a loan, closing and funding a loan, and post-closing, if you're a banker, and even selling the loan, right? So you need to understand all of those costs associated so you can better understand what's needed. Now, number one, and I have no other reason for telling you this other than this is a fact. The bank has to make money, okay? The bank has usually the licensing, the bank has overhead, the bank has payroll, the bank has rent, the bank has a lot of different things going on, right? Credit report fees, DU fees, everything that they need to cover, right? So the bank has to make money. Understand that up front, okay? The earlier and often you understand that, the more easy understanding what your piece of the pie will be. Now, if you're a broker, that's fine. You obviously don't have a bank, but you also broker deals to a bank, right? So keep them in mind, but let's all pretend everyone today works for a mortgage bank or a bank. And if you are a broker, again, we'll still touch on that. Still have the same type of guidance, because then you have the overhead, you have the rent and licensing and everything else. Understand, when you're pricing your loans, everyone has to win. You have to win and make your money. The consumer needs to get a fair and reasonable rate, and the bank needs to make money. So you want to create a win-win position for everybody. You don't want to be too low, and you definitely don't want to be too high. Now, here's the slice of the pie, right? You have to figure out what slice of the pie you want. And then you also have to figure out what slice of the pie you actually deserve, right? Now, the market and other banks, unfortunately, make it a little bit more challenging than just, hey, here's my rate and here are my fees, right? Some competition and big banks undercut the market drastically. Other banks don't really care about rate, and they do tougher deals in the marketplace. So it's all relative to your market, your loan size, and other factors that price in, such as overhead and also your goals and your ability to do mortgage loans. Now, if you want to be competitive, this is me telling you this, and this is comparable to the Chase, the Wells Fargo, the Bank of Americas, the big banks of the world, okay? You need to make, as a loan officer, 0.5% or 0.5%, okay? This will allow you to do every single deal humanly possible where the bank doesn't lose money. So often I see loan officers want to say, I want to make, 2 points on a deal. I want to make 3 points on a deal. And all that's great until you get a deal that doesn't even gross 2% or 3% what you want to make on the deal. So why would a bank want to close a deal where you're making all the money and they're actually losing money? So if you want to be compliant and you want to make money and you want to do every single deal that comes your way, and you're in a very competitive interest rate market where consumers are very savvy, have banking relationships, 0.5% should be where you set your initial commission. Now, look, from there, you have to work with your company to maybe add in a bonus or add in a volume incentive or maybe allow, expenses or marketing money. But from an earnings standpoint, 50 basis points is where you need to be in order to do every single deal. I'll say that again. You don't have to be here, but as this number goes up, you become less competitive. Now, this is not 100% accurate. This is just my take on the market. If you want to have the ability and flexibility to close deals all in on an FHA deal, including all servicing premiums, you're probably going to look at 300 basis points on an FHA deal. That means for every $1 million in FHA loans you close, gross collectively, you'll make 3% or 300 basis points or $30,000. Now, again, from there, you get your cut, payroll taxes are paid, the bank takes their cut, your processor's paid, the underwriter's paid, credit reports, so on and so forth. But that's about where the competitive market is right now. Again, that's not to say you can't sell a higher rate. It's not to say that you have to give a lower rate. Every consumer is different, obviously, but if you want to be competitive and do deals, you have to be around 300 basis points. Now, my personal opinion, again, no other reason than telling you the truth, if you're pricing your loans at 300 basis points for FHA, as a loan officer, you should be receiving at minimum 1%. So if you only do FHA business and you price your loans here, at minimum, you should be working for a third, so 100 basis points of every FHA deal. Now on conventional, again, sometimes you can price your loans higher. I know bankers that price their loans at 400 and 500 basis points for conventional, but all in competitive markets, high balance, jumbo, metro area markets, condos, most banks are all in for 125 basis points. Now, again, you can go higher, but if you want to be able to do every single deal where you have people that love to rate shop you, 125 basis points gross is where you need to be all in on your loans, which goes back to why I said originally 0.5% should be the loan officer compensation. So in that case, 0.5% would be about 40% of the total gross revenue generated for conventional loans. Now, again, if you're able to sell higher rates, if your clients aren't shopping as heavy, if you deserve to make more money, if you stand to make more money, then obviously price your loans accordingly. But I want this Zoom at Noon to set the foundation for reasonable expectations in a rising interest rate market with margin compression. As competition loses business, they are going to try and undercut the market, which we've seen now forever. Okay, at least the 15 years that I've been in this business. You want to be competitive, you want to maintain your relationships, and you want to be able to do almost every single deal possible without losing money. Some things to consider. What is your average loan size? Most people in America have an average loan size of 250,000. My average loan size is about 450,000 due to the area and demographic of my market. The New York City, Northern New Jersey marketplace, Lower Connecticut, Eastern Pennsylvania, Florida, Texas. My average loan size, again, it's a very healthy loan size. So you really shouldn't look at what you're making percentage-wise per loan, but total overall revenue per loan, right? So if your average loan size is $250,000, you want to try and maybe make 2% on every deal to make $5,000 per loan gross. If your average loan size is $500,000, maybe you say, hey, I'm still okay with making $5,000 per loan. So 1% can be, your threshold or your hurdle. But you got to figure out what your average loan size is. You want to try and get your highest loan amount, because if you do it on a percentage basis, a $200,000 loan is the same amount of work as a $600,000 loan in most cases. So if you could just change your demographic or change your audience or increase your loan size, you should automatically be able to do more business and make more money. So this is very critical. Again, every bank and broker runs a different shop, but what I will tell you is, it costs anywhere about $2,000 to $3,000 all in to close a loan, factoring in rent, compliance, licensing, processing, underwriting. So if your average loan size is, let's say, $300,000, the first 1% of revenue goes to just really cover the cost of the loan. So again, keep that in mind. Now, again, if you're pricing your loans very, very thin and competitive, you might be lucky to break even at best, and you just have to do more business in order to offset your costs. Another thing to consider, are you originating your own deals? If you're originating your own deals and you're bringing in your own business and you're not taking company leads, you deserve to make more money per loan. I don't care what anybody says, because there's a cost and an unknown and a risk involved in taking on that responsibility. So you deserve to earn more. Now, if you're collecting leads from a company and they're paying for leads and they're paying for all these other, company resources, right? They deserve to recoup their money and make a return on their investment. And then you deserve to get paid, but not as much. If they're doing all the work, cultivating, the money to buy the leads, buying the leads, giving you the leads, you don't deserve to earn as much. It's just as simple as that. They're hunting and killing for you, and then you're literally just eating. So keep that in mind when you're actually negotiating your compensation split. Again, every market that you're in is different. I know many loan officers have self-originated payout structures, and they have lead structures. Some people want leads just to help, get some business, pay the bills. That's fine. They don't earn nearly as much. So the goal would be to transition to originating your own deals to earn the lion's share. Now, when you get to a certain level, I use the number $20 million a year. Once you're able to consistently close $20 million a year in business, you may want to look at running your own profit and loss. That way you actually run your own bank inside of your bank or brokerage. This way you take on every expense. You set all of your own compensation, your loan officer compensation, and your payout structure. So if you want to do a deal and make $100, God bless, you could do that. If you want to do a deal and make $10,000, God bless, you could do that as well. So, for those people that do a good amount of business, it's very, 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 very encouraged, to hit that profit and loss P&L model. I love it. I think it's really great for the entrepreneur. It's really great for the person that does a lot of their own business and wants to grow, scale, and expand. So definitely look into the P&L model if your company offers it. Now, remember, as much as it is to do right by people, make money, provide a service, right? Your main job is to make money. You're in this business to make money. Don't lose sight of that. You have a family, you have expenses, you have goals, you have wishes, you have dreams. Well, this business allows you to make those dreams reality. So don't give away the farm. Yeah, you want to give somebody a great deal? God bless. Please do that. I've given hundreds of mortgages away literally for free where I made no money on for relationship purposes. But again, you have to pick and choose like any other business. If you're at a bar, what gets you that free drink, that free shot, that free appetizer? Same thing in this business. Why would you give someone a free mortgage? More business, future relationship, doing somebody a favor, all that's great. But don't lose sight of this business. Your job is to make money and provide for yourself and your family. So don't give away the farm. And now we're opening this up to questions. We got 14 people on this call today, so I'm gonna open it up to Q&A. Feel free to ask, personal questions, hypothetical, theoretical questions. I want to get some good questions out of this, hopefully provide some insight. So who's gonna start? Have to call people out. Rama, I'm gonna call you out to start since you're our new first candidate today. I need you to turn on your video and start asking some questions.
No, it is good. Generally, I am a loan officer and I take my broker compensation is 1%. And that is lender paid compensation. Sometimes now after the rates increase, as you said rightly, I cannot reduce because I am a loan officer. I am thinking of doing borrower paid compensation.
And you're a broker, correct?
No, I am a loan officer.
You're a loan officer for a bank, a mortgage banker?
No, I am a loan officer with a lender. I mean, when a broker, with a mortgage broker.
Got it. And where are you located? What is your market?
Market mainly California, but I am licensed in Pennsylvania and Texas.
California, Pennsylvania, Texas. Those are interesting states. Texas, yeah.
I am talking to you from Pennsylvania now.
Where in Pennsylvania are you?
Malvern.
I'm actually closing a deal. I'm closing a deal today in Philadelphia. So
oh, great.
Yeah, I'm in the process of
I live with my son here.
Very,
is
very
my
nice. And where do you
so,
get your business from?
as of now, I am getting more business from California. I mean, my daughter lives in California, and incidentally, I am also a realtor in California, Pennsylvania, and New Jersey.
Very nice. So what questions do you have for me?
No, I'm just understanding what you said is correct. We should not charge more. Earlier, I worked with a broker who was charging 1.5% lender paid compensation. But now this broker charges 1%, that is okay. And after this interest rates increase, I'm thinking of going for borrower paid compensation so that we should not make more money from the customers, whereas they should refer us and we should get more business.
Yeah, it's all relative, right? And again, I think as you expand in your career, you know, everyone. What's nice about this business is everyone's able to think what they're worth, right? But then it comes down to what the borrower is willing to pay you for your worth, you know, and those are things that are variables. So I appreciate you sharing that insight. And yes, it definitely changes with the market. Inside the chat, Joseph asked, "Can you explain yield spread?" Yeah, absolutely, and it's very simple. Let me just give it in very easy to understand terms, right? So let's just say today's interest rate is 3.75%. You know, if you charge 3.75%, you may make 1% for just selling 3.75% in 0 points. If you sell somebody 4%, maybe you make 2 points, right? If you sell someone 4.25%, maybe you make 3 points. And again, I'm giving that as an example, okay? So the interest rate is set. If you sell an interest rate higher than market, you make yield spread or a lender premium. It's baked into the sale of the loan. So when the bank or broker then sells or brokers that loan, you get paid a compensation. And that's basically just because the borrower is paying, you know, a higher interest rate over the life of the loan. So the loan officer or bank then earns that revenue when that loan closes and is sold. The bank pays that premium, you know, with the hopes that they have the loan for a minimum of 6 months, so they can obviously break even on their premium and earn off of that accordingly. Joseph, does that explain it a little bit? It's basically all baked into the market and where like the supply and the demand is for buying, you know, mortgage-backed securities. Basically, the higher the rate, the more yield spread, you know, the more earnings that the bank makes. Okay, got it. Awesome.
Well, then
Hey,
why
Rick Vega,
would,
Mike Young, what's up, man? How are you?
hey, how you doing? Good morning, Jeff, or good
What's going
afternoon
on?
to you.
Looking good.
So why would you be promoting a higher rate and a higher yield spread for the client? Because I would assume that most clients would say, you know, I can then get this lower rate, and they could be rate shopping as opposed to shopping an individual.
Yeah, see, yeah.
I understand the yield spread. I just don't understand the allure or the drive to raise that rate.
I mean, look, at the end of the day, people have to make money. Let me give you an example that relates just to you only because I know your story, right? You know, you've been working now for 3 months, 4 months in this business, right?
Right.
Do you feel like your financial compensation so far has been equal to or more than what effort you've actually put in so far?
So far, I think it's more than, you know, I'm trying to build relationships with realtors, and I've got another application just last night, and you know, I don't feel comfortable with the comp plan that I have, so I'm looking at going borrower paid just because the work that I know I'll put into it would be far outweighed by the paycheck I'd get. So I want to make sure that I give value to these people, and I have a long-term relationship as opposed to a paycheck in my pocket.
Yeah, and again, look, I'm not saying that's wrong. I'm not saying that's wrong for business or wrong for building a business, right? What I'll tell you is, again, when you actually start, and we spoke about this on prior calls, when you actually start putting an hour value on your time, whatever that
Right.
number is, right? $50 an
Right.
hour, 500 an hour, 10,000 an hour, whatever that number comes out to that you believe you're worth, you'll start, you know, to really understand what I'm talking about, right? And again, on some deals, you're able to make really healthy money on. On other deals, you have to give it away just to be competitive, right? So
Right.
and the thing is, when you work for a mortgage banker, right, no one ever really sees the economics, truthfully. And that's me telling you that. And again, I've personally run profit and losses, net branches, and mortgage banks since I'm 24 years old, since 2011, right? And it is what it is. You never know what the bank actually sells that loan for in the secondary market to the investor. You don't see that. You just see what your lock price is. Okay. You don't know if they're hedging. Again, I'm getting very detailed because I want to touch on this to set the tone. You don't know if the bank's hedging against interest rate movement and volatility. You don't know if the bank is bundling mortgages up and hitting a certain threshold. Let's say you do $1 million a month in business with, I'm just giving an example, Wells Fargo, right? You lock your loans in with Wells Fargo, but your bank may have a certain commitment threshold where if they sell in 1 month $10 million of loans to Wells Fargo, they may pick up a half a point extra. They might make an extra, give an example, $50,000 in premium because they delivered a certain type of volume commitment to a lender, right? These are all things that most loan officers are like, what the hell are you even talking about? Because they don't know that. They haven't done that. And you never see that unless you're in an actual ownership management position of the same, right? So when you price your loan out, I don't know how you price your loan out, or what system you use to price loans out. Everyone has a different system, which makes it a lot more complicated for everybody, right? In this particular case, you might think you know what you're pricing your loans out at. Hey, we're making 3 points on this deal, right? You're making a point, but you don't really know if that's 3 points or 5 points or 6 points or 4 points. You just know based on what you're told, right? And lenders can change that margin at any time. So in your personal scenario, right, if you have the ability to earn a half a percent on every deal and you're comfortable with that, and you want to make $5,000 a month, that means that you have to hit $1 million in closings to hit that. I learned and I was trained early on in my career and believe that this is a volume business. So what I mean by that is, let's just say, for example, we're having a discussion, you want to come work with me, right? And I say, Mike, here, we're going to set your guaranteed compensation at 0.5%, right? Up to $500,000 in closed loans. Once you hit $500,000 in closed loans, right, you now earn, I'm giving an example, 0.75%, right? Because now I know you closed that business. I know we're bringing in revenue. Now, Mike, when you close $1 million in loans, now you're going to earn 0.875%. This is for that month, for a 30-day window, right? Now, Mike, if you I'm giving an example. Let's just jump. If you close $2 million, I'm going to pay you 110 basis points, right? So if you do $2 million in 1 month, you'll earn $22,000, right? If you only do $300,000 this month, you're only going to earn $1,500, right? So I believe in volume incentivized bonuses, because that's how, at the end of the day, the law of averages will kind of shake out to allowing you to do the most amount of business and earn the most amount of money, while the bank is able to cover all the costs associated with originating, processing, closing your loans, paying the rent, and everything else, right? Most loan officers don't have expenses and they bring in a loan and they want the majority of the business. But don't forget, while you've been doing no business, your banker or company is still sitting there paying, the receptionist, the processor, the underwriter, the closer, the post-closer, and everybody else, right? Maintaining warehouse lines, however your company runs. So loan office, and again, Mike, I've struggled with this literally since, I was 20 years old, about to turn 21, because I didn't understand this until I ran my own profit and loss and made $50,000 in 1 month. And then I was left with like 12 grand after it was all said and done, right? I mean, payroll tax alone is expensive, right? And you don't see that. Well, you might have seen it from the employment side in your prior career, but things add up. Losses add up. Loan buybacks add up, right? So for someone like yourself, you have to figure out, and the best gauge I could tell you is like, go to whatever 2 lenders are in your market the most, Chase, Wells Fargo, let's say the big banks. Like I said prior, go to those websites, right? See what they're pricing their loan out today. Let's just say it's 4%, right? Okay. You price that loan out in your system and you see how much revenue you would make as a loan officer at 4%, right? And that's your immediate competition. Okay. You see what I'm saying? Yeah. I know guys that work for Wells Fargo in Manhattan, their average loan size is $1 million. but they're only making 35 basis points per loan, but they're literally sitting in a Wells Fargo desk all day being fed business from their bankers, but they're making $3,500 a loan to themselves. You do 10 loans a month, which is not hard in Manhattan, you're making $35,000 a month, right? Now, I also know guys that do 2 loans a month and they make $10,000 per loan to themselves, right? So it really depends on the business model you want to run, but early out, I'm on your side where I agree that you want to get the consumer the best rate and you want to build your business the right way. But don't forget, Mike, you got a wife and you got kids, right?
Oh yeah.
They got to eat. You're not working a charity. Your goal and your job should be to make, is to clear 6 figures. I'm just being honest with you.
Right. Well, last thing I want to do is have somebody look at me and say, well, then what value does he have if he's discounting his efforts? He must not be that good, or he's trying to be the Walmart of lenders. And that's where I try to draw the fine line and make it clear, to myself when I look in the mirror that I am here to make money, but I'm not here to make an exorbitant amount. And right now I am fortunate to be in the position to where I don't have to worry about it. And I don't have to look at it and say, if I squeeze another 1,000 out of this deal, that'll be good for me. I look at it and say, I'd rather not squeeze 1,000, build a good relationship, and keep moving forward.
What's your average loan size where you are in your market right now?
I've been averaging just over 600. I've been fortunate getting the purchases.
That's very healthy, right? So the reason why I asked that question is, again, so I look at it as, again, I don't look at the business the same way I used to, and especially when I'm speaking to a loan officer, specifically a new loan officer, right?
Mm-hmm.
Let's just say on average, let's say a client gets referred to you today. Let's just say by now to 90 days, depending on the market, you should have them closed, right? So you have this client that you're nurturing, hand-holding for 90 days, right? Let's just use that as a number. How much are you willing to work for someone, being available 24/7, issuing multiple pre-approvals and closing a loan in 90 days, right? What dollar amount makes sense for you? Is that number 4,500? Because if it is, now you can make 75 basis points, right? 0.75% per loan at 6,000. You're making $4,500 on average per loan. You're giving a great deal to the consumer, and now you're being paid $1,500 a month for 3 months. See how you break it down to that?
Got it.
And then you figure out again, hey, how many pre-approvals did I do for this client? Is this client texting me 3 times a day or once a week? You have to figure out how much each person's individual, right? And I'm a crazy person when it comes to that stuff. If someone is abusing my accessibility, right, or they're torturing me on nights and weekends, that factors in, when I'm thinking about locking the loan. I'm being honest with you, right? Because
right.
Look, time is worth something. My attorney who charges me $475 an hour, right? He's billing me, what does that come out to? He's billing me, $40 to send me an email. You know what I mean? To send an email, reply to Jeff's email, $40, thought about his case, $800, put it like this. When you get involved in a lawsuit or litigation, if you've never been involved in a lawsuit or litigation, and for all you attorneys out there that potentially are watching this, right? My personal opinion is hire a powerful attorney, get the bill in the first month, watch what they charge, and watch what you get and what they do. You're going to value yourself at a much higher ticket. I promise you that. Because at the end of the day, you're self-employed in this business. And if you don't value and charge for your time, you're not going to get a penny for it. So again, that's something that comes with confidence. It's something that comes with experience. But my attorney just sent me an $11,000 bill just for January's work alone. I know I worked harder than he did on my case in January. He sent me $11,000 bill, right? So, and I tell you that because when you break down $11,000 divided by $475 an hour, it's like 25 hours worth of work, right? I'm pretty sure everyone on this call right now, you better be busting your ass more than 25 hours a week. So if he's billing me $11,000 for 25 hours worth of work and you're working $100 hours a month, realistically, you should be making $44,000 a month. You see how my psychology works in that regard?
Yeah.
And definitely. Again, I'm here to help you. I don't care if you make $1 a loan or $10,000 a loan. I'm not in your pocket. I'm never going to be in your pocket. I'm just telling you, as Michael Young, You need to justify what you're worth, and your value only goes up or should only go up the longer you're doing this business for.
Got it.
Make sense?
Yeah, it does make sense. It's just a challenge being new to the industry. That's probably the biggest challenge is pricing loans and trying to make sure that somebody sticks with me as opposed to going to the next guy down the road.
Here's another thing that I'm going to tell you, and this is a fact. And for everyone listening on this call, write this down, okay? Everyone better take out their pen and paper and write this down. Interest rates are up. Everyone's already pissed off because they missed out on the 2% interest rate, right? Okay, couldn't we all agree, right? Everyone's already pissed off. They're going to be pissed off at you regardless whether you give them 3.75 or 3.99. You're better off pricing it at 3.99 and make some money for yourself, right? Because they're going to be pissed off either way. And at the end of the day, 0.1, 0.2%, we know what it makes on the lending side. The consumer doesn't know what it makes, right? So 0.1, 0.2%, sell yourself, sell your service, and tell your consumer, listen, here, you can do 3.75%, but why don't we do this? Why don't you take 3.99%, right? And I'm going to give you a $1,500 lender credit to help offset your closing costs. So yeah, you know what? You're making $3,000 more. Give them half of it back in a lender credit, help offset their closing costs, and tell them, I'm going to do your refinance and rates drop, because I believe that rates are going to drop. Or when your house goes up in value, I'm going to get you out of this PMI and into a conventional loan, so that way you save on your mortgage insurance. Become an expert and control the conversation, control the narrative. Do not get run over by the consumer who thinks they know everything. I hear
So,
crickets. Yes.
I'm a new loan officer and new to all this, and like you said, pricing and is probably the most challenging, or I don't understand at all. I work for a direct lender, and the setup is they have a branch, and within the branch, I'm one of the loan officers within the branch. But we were told to always sell it at 101. I just know that's it, but I really don't know what that means or how that, works. And I'm assuming that, everyone in the branch and the processing and underwriting and all of them, they also, cut and all that. And I get paid 1%. So, I don't know when I can go and ask, or I don't know when I would have that a little bit of room where I can offer the consumer, better pricing or better rate. Because all I know is I need to sell it at 101, but I have no clue as to what that means.
Yeah. So, by the way, new loan officer, what is your actual name so I can address you by your name?
Oh, my name is Kathy.
Hi, Kathy. Thank you for joining today. I appreciate you joining. Where are you located? What's your market?
I'm in California.
Very nice. Where about in California?
Southern California.
SoCal? Perfect. So real quick, so let me touch on, I can't give you insight as to your personal, pricing, because here's the reason why, right? Like, so when I set my margins for my bank, I actually, I'm the type of person, like, I'm all about transparency. Like, if you follow me, if you see anything I do, like, I tell more because I never want someone to think that, like, I lied to them or deceived them. So, like, I'm an open book, and I'm that way because when I started in the business, everyone kind of put blindfolds over me, right? So when you see your pricing at 101, right, that's just the blindfold that the company that you work for is putting over your pricing, right? So they tell you, hey, sell 101. Okay, great. You don't know if they're making 1% or 6%, right?
Right.
And I'm just being transparent with you. So let me ask you a question. Did you ever hear of like beginner's luck? Like, I'll share a story. When I played craps for the first time, I was like, I don't know, 18 years old. I was in the Bahamas. I just graduated high school, and I went to the Atlantis down in the Bahamas, and I think I had like $20, whatever, and I put it on the pass line, right? Because someone said put it on the pass line, and I literally sat there at the table, right? And put it like this. I turned $20 into $800 with just sitting with $20 on the pass line. And that's a God's honest true story, right? So I made $780, not knowing what I was doing. I was just watching the dealer put $20, $20, $40, $60, right? Adding money up. I had no idea what I was doing. If I knew what I was doing, I probably would have made $5,000, if not more. But I just sat there and I had beginner's luck because I wasn't overthinking the game, right? So my main focus for loan officers to start is to go out there and get business, and don't worry about what compensation or rate you have to sell is. Go out there and tell yourself, like, if your company's telling you go sell 101, right? 101 pricing, go out there and sell that 101 pricing until you make yourself $1 million, and then worry about rate and pricing, right? Because everyone gets so caught up in rates and pricing that they forget to actually go out there and do business, and then they get more worried about the rate and pricing. Meanwhile, they have no business, right? So again, with that being said, like me personally, I'm able to see what's called raw pricing. I could see how much total revenue when I price a loan is baked into that rate, including yield spread, servicing premium, whatever you want to call that.
Yeah.
But for your personal self right now, I don't know if you're new, go out and get business and try and sell that rate with your compensation that you would, hopefully deem fair that you're making per loan, until you have enough business, or until you start losing business because people are telling you your rates are too high. Does that make sense?
Yes. Well, that's pretty much how I've been doing anyways. I don't really question, anything like that. It's just, when I have to be compatible, people are coming with the rates that are lower, then I just don't know what sort of, if I'm able to go ask, hey, can I sell it at less than 101? Because, I understand the company also has to make money too.
Here's what I'm going to tell you. Here's what I've learned, and I'm giving you this, and this it's probably not worked for me in some cases, but it's worked for me in many cases. When it comes to you needing to close a deal lower than that 101, don't ask. Meaning, you walk into your manager, your boss, the owner of the company, and you say, I need to close this deal at 99 pricing. Here's the reason why. Lock the loan. Don't give them the option of that, right? I had this guy, this is a true story, and I'm going to share this with you from a humble standpoint, not an ego standpoint, okay? I closed in 1 month, and I think it was like June of 2015, right? I had a pretty big month. I was set to make to myself over $100,000, and I finished at like $97,000 or $98,000 in 1 month. I was like 28 years old, and I had made $100,000 prior in multiple months. Okay, but here's the reason why I tell you this: I didn't close or make to myself over $100,000 that month because the CFO of the bank I was working for at the time wouldn't let me price a loan and close it, and told me I need to go out and sell a higher rate. CFO of the company only made $75,000 per year. Okay. He saw this 29-year-old that just made more money already that month, more so than he made in his entire career in 1 year. Right. Needless to say, I didn't work for that company much longer after that. But I tell you that because it's a volume business. Okay. So if you give someone the option, they're going to take the option, and they're also going to give you the wrong advice, right? So I think the reason why, I love doing what I do now much more than I did is because I'm able to share this insight with you as being a high earning, high producing loan officer, and also give it to you from an ownership management level, right? Now, you can't make a habit of pricing your loans under that 101 or no one makes money. But when you have that instance, 1 out of every 4, 5, 6 deals where you need a favor in pricing, you need to be granted that favor. But the more you close loans at 101, the more you'll be able to build up your ammunition to ask for that favor. Now, if you need a favor 4 out of 5 loans, then your pricing is too high, and you need to reduce your overall pricing, potentially even your own compensation. Does that make sense?
Thank you. Yes, thank you.
If you want to have, just to give you like a side note, off the record, if you want to potentially like text me a loan scenario that you have, I'm giving an example, $400,000 purchase, 3.5% down, 800 credit score, FHA, send me the county zip code. If you give me the scenario of a loan that you price where you see 101 and you want to send me that same scenario, I could price it in my pricing portal, and I could tell you exactly how much your bank is making on that loan, if that's something you want to know. And again, the way I run my operation is my loan officers, my team, everyone sees raw pricing. They know what they make, they know what the bank makes, and they know what I make, right? And again, the first person not to get paid, the bank makes their cut regardless. My loan officers make their cut regardless. I, if anybody, take a haircut, right? And I don't like taking haircuts, right? Because we're all in this business to make money, but I'm the first person to offer a haircut for the bigger vision of my loan officers to help grow their business. It just can't become a habit where the bank's making more money than me, the loan officer's making more money than me, and I'm doing all the work and providing all the resources, if that makes sense.
Sounds good.
Sound good? So if you want, just I think you have my email. It's just Jeff at, I'll put it in the, I'm going to put my cell phone number in the text. If you want to just text me a scenario on a loan so you can compare apples to apples, I'm happy to price that out for you, and then send you back the total compensation in the market as of today.
Okay, appreciate it. Thank you.
You're welcome. Tanya, I'm calling you out. I know it's your first time on here. Thanks for joining. I know we went back and forth on Facebook a couple times. Would you like to turn your video on or take yourself off mute and we can engage a little bit? Or if anybody else, Rick Vega.
Yes, sir.
Hey guys.
Hi.
Hey Tanya, how are you?
Good. I'm a new loan officer. I'm out of Key West, Florida. Pricing has been something that's taken a little while for me to figure out, even in the engines and stuff. I do work for a bank under a broker, and I have dogs.
That's fine. I hear right through the dogs. I hear a lot of barking. We're good. There's all dogs on this phone call right now. Listen, you got to be a dog if you're going to be in this business,
Yeah, and I rescue dog, whatever. Anyways, that's beside the point. I'm just here to learn as much as possible. And I appreciate your spiel in the beginning. It sort of confirmed where I am with my pay, with my bank. I've been having negotiations. I started about a year ago as a processor and am now moving up as a loan officer and signing a new contract. So it was really perfect timing. And I wasn't sure where I was, even what industry standard was. And so I was sort of going into it blind, and your talk this morning has been really informative for me, especially, and let me know I'm in a pretty good place, I feel like. So thank you for that.
I appreciate that. Thanks for joining, and thank you for that feedback. What I will tell you, I want everybody that is either on this call or is going to watch this call or listening, you can Google Loan Depot, the most recent headline on Loan Depot. They were out touting how much market share they got, this and that, right? Their revenue dropped 91%. I didn't write the article. This is public information, right? So think about that. They took over market share. They grew crazy. Awesome. Great. Excellent. They were giving deals away. I worked before Loan Depot acquired a company called Mortgage Master. I worked for Mortgage Master for 89 days, and I was due a six-figure bonus payout. This is all public information. I was due a multiple six-figure bonus payout on the 90th day. And they fired me on the 89th day, so they didn't have to pay my multiple six-figure bonus payout. That's a fact. I had litigation going on against them. We wound up settling outside of court. That's a fact, right? But they were being bought out by Loan Depot, so they didn't want to lower what they would have to be bought for. So they fired me on the 89th day of a 90-day at-will contract back in 2012. Again, fact. So I don't like Loan Depot, just like guilty by association. That's a fact as well. But if you go and look at this article, great, they did more business and they made 10% of the money. That's not how business works, right? If you do more business, you should make more money. So that's what I talked about, undercutting the market. And again, that's a public article. You guys can all Google like Loan Depot earnings or Loan Depot market share. It should come right up. I believe Housing Wire wrote the article. Could be wrong. But again, more business doesn't always equal more money, right? So just keep that in mind when we talk about, Tanya, what we just spoke about, do your right thing, build business your own way. Look, what's fair for you might not be fair for someone else, and vice versa. That's why we live in a great world where we are able to negotiate. But, look, when you do negotiate, my number one tip to you is like, just bring the facts. If you could build your case on, why you deserve what you're asking for, you should be able to be granted that.
Yeah, well, my offer was exactly what you said was ideal from the beginning. So I feel pretty fortunate in that. And, the president of the bank I actually work for is offering me a salary to build a pipeline, and I've got full benefits. So I don't think I'm going to complain about it too much.
Can't be that. Can't be. Listen, when I first started, again, I was super young. I was 20, about to turn 21. I only got put it like this. I got $500. This is, again, fact. You can go back and look at all my old posts. I got $500 a week in a draw, $500 a week with taxes and everything else taken out. I think it came out that I brought in like $1,400 or $1,600 net, right? My rent was $600. My cell phone bill was like $100 at the time. And then as soon as I closed my first deal, I went out and bought a Denali truck. So basically, if I didn't close, and my payment was like $900 a month, right? Because I was in my car the whole time. But I purposely set it so I had to close deals. Like if I didn't close a deal, I had to charge everything to a credit card, but giving me that $500 a week allowed me to cover my overhead and expenses, but it at least helped me breathe, at least knowing like my car payment, my rent, my cell phone bill, which is what I needed to survive, was covered. So if you're getting a salary with benefits to get started and you have an owner or a bank that believes in you and is willing to give you that money, you can't ask for anything more than that. In this business, everyone gives nothing and expects everything. So if somebody's willing to invest time and money and resources into somebody that's not proven, kudos to them. That's how I believe business should be done. Also understand that generous faucet can be cut off at any time. So if I'm you, I want to go, work my butt off so I could earn more per deal and make however much money you want to make per year.
Yeah, of course, there's always some other factors that make it a little more complicated that they're willing to support me specifically, and that's to do with my broker, who's proving difficult and usually works alone, and they want this program to grow. So she's having trouble kind of letting go a little bit. So I'm struggling with that, but she's someone I've known for 30 years, which you know how that can complicate things too. So I also wanted to circle back to something else that you said that I really appreciated. And as a new loan officer, I think I struggle with, and maybe other people do too, and that's controlling the conversation and the narrative. That's a big thing. And with low confidence and experience, I think I'm struggling with it. And I watch my broker do the same conversations and how she steers them. And I'm always impressed. And I'm just wondering, how you can jumpstart that for yourself as when you're new with little experience.
Experience is
just
the best,
experience.
Experience is the best teacher. And again, so I know this is your first time on the call. I'm not sure if you've gotten back and watched any of the other Zoom at Noons that we've done. I highly encourage you to do that. They're all on YouTube. And it's not like we're creating one big story here, right? Or like one big training course. Like I take the questions that I'm asked and I turn it into a weekly course. I sit down on Tuesday and I build out the quick little PowerPoint that I think are powerful bullet points to keep it short and sweet. And then the Q&A is where this is where I think the gold is, right? Because you're dealing with real life experience and problems and scenarios. We could do some type of role playing, hey, you're the consumer, I'm me, and we try to do that. But look, every single person is different, right? In this business, there's no perfect script. That's why I don't believe in scripts in general, right? Every single person is different. Every single need is different. Every single person has fear and anxiety when they're getting a mortgage or buying real estate. I don't care if they're experienced or inexperienced, right? You want to become the trusted expert as early and often as possible, right? Now, how do you overcompensate or make up for your lack of true hands-on experience in this business? Over communicate. What does that mean? Monday morning, hey, Joe, I know you didn't get your offer accepted this weekend. I'm just giving an example, obviously. By the way, I track interest rates daily. Here's an article that you should read up on just so you could be familiar with interest rates. So if you don't have the experience of controlling the conversation with your own confidence and verbiage yet, send your clients over communication as if you're just bombarding them with knowledge. So that way they think you're a library of resources. Also, the people you refer them to, whether it's an attorney, a title company, a home insurance company, whoever, needs to be second to none, right? The number one way to get somebody to trust you is to refer them to someone that outshines you or is equal to you, depending on where you're at in your career, right? Because then they know you only deal with real players, right? So you need to use all these external resources, right? And I'm gonna use the phrase the quarterback. Again, if you did any research on me, which you probably didn't yet, I have a brand that I created back in 2017 called The Mortgage Quarterback. Okay. I combined my football career and history with the mortgage business. And if you notice, if you know sports, quarterback, whatever, like the quarterback, Tom Brady, for example, since you're down in Florida, controls where all of his players are and needs to know where they are at every time, right? So the more you quarterback your client, the more they're going to trust you to deliver for them. You don't need to know everything. You need to know the people that know everything. So then that way they're an extension of you, which then makes you look more valuable.
Yeah, thank you. We have an excellent team of people that we work with, and I've been doing that already. Or, I just fess up and say, you know what, I'm not sure. Let me get back to you, instead of saying something that may or may not be true.
I think if you go back and watch, I think it was like 6 or 7 Zooms we've done prior to this, I think you'll probably knock them all out today. It's like one long binge series marathon. I think that you're going to take such valuable information away from there, and you're automatically going to feel more confident, especially after this call. But going back and watching the pre-recorded episodes that we've done in the past, I think you'll immediately wake up tomorrow morning ready to kick ass and take on the day, even more so than you already will, because there's a lot of good knowledge and questions and answers in there. And it touches on a lot of things that early loan officers struggle with, right? And that's why I do this, is because I expedited the path to success just from having don't take no as an answer attitude at 20 years old. If I started today at 35, I probably wouldn't have as much aggression or success, because you have more energy at 20 and you're more naive at 20 than you are at 35, right? Obviously, and 45 and 55 and 65. But these episodes are powerful because they touch on the things where management and leadership lack inside of our industry. It's no secret. Anybody that says their management and ownership is the best is lying to you. There's no perfect anything. This is supposed to be like a breath of fresh air, outside, unbiased, true, raw, based on my experience and intuition on how the business is and should be and how people can succeed earlier on. My number one focus is streamlining your path and everyone's path to success, because that's what I believe people deserve and they're not given, especially as a new loan officer inside of this market and industry.
Yeah, I mean, I know I thought, my previous life was I rescued dolphins and manatees. So
that's awesome.
This was all new to me. I mean, completely new. When I started at the bank last year, fresh with my license, I was all, and then my first loan was a $2.5 million loan for a guy that owned 14 properties, 6 LLCs. And I was like,
pulled your hair out. You had to. Yeah. What the hell is this?
Oh my God. Yeah. I had no idea.
K1, Schedule C's. Hell yeah.
Yeah. I was like, what's an 1120S?
Did you get it done?
I don't know.
Did you get the deal done?
Absolutely. And then another one right behind it.
Hey, you already won, right? So what I always tell people is you need to take the biggest problems, struggles, experiences, losses, terrible outcomes, and build off of that, right? So somebody somewhere along the way trusted you, right? And somewhere along the way said, this lady's going to kick ass and get this deal done. And as hard as it was, think about how much experience you got and knowledge you got just from that one transaction.
Oh yeah, absolutely. Absolutely. I just learned so much. It was incredible. And I cried multiple times. I said, I'm not going to do this. I can't do this. And then we did get it done and obviously clear to close you learn that those are the best words you could ever hear quickly.
Yeah, and again, clear to
Well-
close, and then with a happy client at the end. I'm about to post. So if you don't follow me on Facebook or social media or Instagram, definitely do so. I don't know if you have Instagram, but I'm putting my Instagram right here. So I'm literally going to show you. I took a deal yesterday, and long story short, not to get into it yet because it didn't close yet. I don't ever jinx a deal until the wire hits. My wire hits. I'm saving a client $1 million. And if I didn't do this loan for them, he would lose 6 of his properties that he signed a deed in lieu and foreclosure to. I'm personally lending him money, $40,000 from my fund, and he's saving $1 million. The lender has the deeds ready to be filed that he's currently with that could take his properties, 6 properties, right? And I tell you that because I want to show you how experience translates into other business. And once I get this done today, I have $1 million in loans from the same person that I'm going to close next month with non-QM refinances, right? So I was able to take 15 years of experience, hurdles, losing money, losing deals, losing clients, you name it, right? And now create value that no one else is willing to create in 19 hours for somebody start to finish, which is unheard of to begin with, right? To then earn $1 million of this person's business, right? So he saves $1 million, I close $1 million in loans, and we all go on. But I tell you that because, look, I wouldn't be able to do what I do today without experiencing the hardships and trials over the past 15 years. So you can't look at trials as anything other than making yourself more valuable.
Yeah, exactly. Thank you for sharing that story. It's a good inspiration.
Keep kicking ass. Yeah, keep kicking ass. Again, like you have to look at struggles and challenges as making yourself more valuable. When you shift your mindset to that, the victor rather than the victim, you're gonna wake up in the morning and ask for challenges, because that's how you are able to then not be rate shopped. People are coming to you, they're not questioning your rate or fees or anything because they know you're the only option, you're the only game in town. That's how you build that reputation, but it doesn't come overnight.
Absolutely. Thank you.
So I'm proud of you.
Thank you.
I mean, I appreciate you taking the initiative today and showing up. Again, like we do this every Wednesday at noon. Hopefully you can, tune into most of them live. Hopefully you can engage. If you can't, watch all the other ones. Again, they're always posted to YouTube, but, look, I'm rooting for you. I'm sure everyone else on this call is.
Thank you.
You're welcome. Hey, Darlene, how are you today? I see you're on. I see your videos hidden. Does anybody have any questions or anybody have any insight or have any current problems, hurdles? Sherry, Cherie, Benny, Anand, and I learned a lot of new people on today's call. Who's next?
Rick?
Hey, Rick, how are you?
I'm okay. I would say I'm a new loan officer, but I'm a returning loan officer.
Rick,
I left,
I very much so appreciate the 1980s white shirt like I have on with a beautiful tie and suit. I think we need to get back to professional attire inside of the mortgage business. So you are 10 steps ahead of the competition already. Welcome back.
Well, yeah, I'm back in, and in that time I've relocated. So I'm in a new place, new town, don't know a soul.
Where are you?
North Dallas.
Oh, Texas. Hot market.
North Texas. Hot market, yeah. I left Southern California.
You know what? You went from being a California boy to now a Texan. Are you wearing a cowboy hat or not yet?
Not yet. But here's the thing. I speak at length to realtors trying to get their business. I don't want to appear needy, right? I can't go in there and offer low rates or this. I do low rates. Everybody does low rates.
Yeah, it's bullshit. If you lead out there with you have low rates, you might as well quit the business.
Right. So I talked to this guy yesterday, and he says, you know what? I want to get to the point where I can trust you with my clients. And I thought that was a revelation, because we're all trying to do that. Hey, I can do low rates. I can give it stuff away. And when I call realtors, I don't do that. I try to, let's sit down and have a cup of coffee. I want to see how you work your business. I want to see what's going on, because I haven't done much here the last month and a half. So, that's my challenge.
So Rick, let me tell you. So I'm a big believer. So I know you don't know me from Adam. I don't even know who Adam is myself, but here's what I'll tell you. I have this, one of my gifts in the world is being able to really expedite and see people's strengths without them seeing it usually in themselves. I usually see people's potential more so than I see what they actually do, right? I don't know how
Right.
old you are. You look seasoned by your picture and your
I am.
phenomenal suit. Nothing better than a crisp white shirt. Again, that's what I was raised on. So I love that look, right? My
Thanks.
thing
Yeah.
is, don't go against the trend. Go with the trend. So my audience consumer demographic for you would be baby boomers and above, talking to them about accessing their equity to plan for either life events, death, divorce, maybe marriage, maybe funding a trust for their kids or grandkids. You need to relate to people your age on your level that respect you for you, okay? Maybe even potentially reverse mortgages, become an expert in that, because that's going to make a massive comeback with all the people that are retiring on Social Security that can't refinance, okay?
I've done a couple.
So that's what I would consider to be your low-hanging fruit. Talk to people, your age or older than you, because they're going to still want to deal with you in person, handshake, face-to-face, coffee table, provide that level of service. And that's how you'll not only get back into the game, but kick ass getting back into the game.
That's what I thought. But they all kept telling me, "Nah, use the technology, man. They don't want. Nobody likes to shake
Yeah,
hands
you know
anymore."
who tells you that? Somebody who's inexperienced and never did $100 million a year in business in their life.
Yeah. Okay. That's just what I needed to hear. Thanks, man. Because that's where I was thinking of headed. But we'll see what happens.
There's an old
Thank you.
saying, right? If you trust other people's words over your own intuition, you'll never get to where you want to be.
Makes sense. I'm going to go back and listen to the rest of y'all's. You like that, huh?
I knew you were a Texas boy at heart.
Thanks a lot.
You're welcome, Rick. Good luck.
Thanks.
Who's next on here? We want to hear from someone that's brand new on the call today for the first time. I'm not going to call. Actually, I will call you out eventually if you don't step up. Who do we have left? Joseph, you got anything verbally to say? Anybody else? Sherry, anybody?
What are your thoughts about paying points at this point?
It's all based on the individual transaction, realistically. And let me put it like this. If somebody in this market is overpaying for a property or doing a highest and best offer, right? Let's say they put a $800,000 offer in on a $750,000 property. I recommend them paying points. I actually have this exact scenario in Massachusetts right now, literally to that penny. I recommend it because they're going to get a lower rate and the market would have to go up another 10% for them to break even, right? Realistically, because they're overpaying for the property. It's also tax deductible. Points are 100% tax deductible.
Okay.
So for high income earners, paying points makes sense to get the lower rate combined with the tax deduction. So let's just say you pay $16,000 in points. If you're in a 40% tax bracket, realistically, you pay $16,000 in points at closing, you'll get 40% of that back in your next year's tax refund, right? And you get the lower rate. So I do recommend it in a lot of cases. I also, again, based on experience, based on the consumer themselves, if I know they're very simple and they're going to be in the house for 30 years, I always recommend it and I do it and I tell them after the fact. Hey, look, rates are at 4. I locked in at 3.25. Yeah, you're paying 3 points. You're never going to have to refinance again. You're going to die in this house, basically, right? But you always want to run your cost break-even analysis and ask the question to the consumer, how long do you plan on staying in this house for? If they're a new family, a starter family, and they're like, oh, we're going to outgrow this in 5 years, it doesn't make sense to pay points. If someone plans on staying in a property 5 years or longer, 100% recommend paying points right now in this market.
Okay. Because it's a debt consolidation and they're going to pay 2 points, but it's a 3.75 at that number.
It's interesting. So in that case of debt consolidation, what I may want to do, let's say they're paying 2 points at 3.75, I probably wouldn't put them and have them pay points. I'd probably give them the higher rate if they're debt consolidating and give them that 2 points back as cash out in their pocket to maybe fuel or fund an investment into the stock market or an IRA, or even potentially buy a life insurance policy to cover the balance of the mortgage. Again, something along those lines. You know what I mean?
Okay.
A debt consolidation is usually something that repeats itself in history. So they're going to be coming back to you probably for more debt
They will
consolidation.
repeat. They will definitely repeat.
So if you know they're going to repeat, you don't want them to pay points. You're going to come back. They're going to come back to you to do it again anyway. So you're better off giving them that cash in their pocket for a rainy day. Personally, that's what I recommend. But great question. Anybody else? Sherry Simmons, I want to hear from you. This is your first time on today, I think. Can you take yourself off mute? Can we see that beautiful face?
Hi.
Hey, Sherry, how are you?
Good. How are you?
Doing well. Thanks for joining today. How can I help you? What do you have going on?
I'm really just learning everything I can right now. I started at the beginning of the year, but was sick.
Like 46 days ago?
Yep.
Whoa, brand new. Welcome. Where are you located?
Nashville.
Oh, hot market. Tennessee is hot.
Yeah.
What are you working for, a banker or a broker?
We're a lender, but we have a lot of investors. So
Probably a banker then.
yeah.
What's been your experience so far in the business? Tough, challenging, don't know where to go, don't know where to look, or what are you thinking?
I mean, I have kind of I've been talking to realtors, just creating relationships. And
Can you do me a favor?
what?
I'm going to re-put my cell phone number inside the memo notes in this chat, and I'm going to connect you with my very good friend who runs and does business development for a very large home insurance company in Nashville.
Mhm.
And she's a phenomenal lead source, and I'm going to connect you with her. Her name is Sarah, and I want you to have lunch with her next time she's in Nashville, and I want you guys to do business. She will immediately be able to help you do business with realtors in your marketplace.
Okay.
So I just put my cell phone number in there. Just text me your name, and as soon as we get off this call, I'll text intro you to Sarah, and you guys can go out and kick butt together.
Okay. That sounds good.
What's your prior career?
Well, I had my license back in Florida right before the big market crash.
Are you a Florida girl?
Mm-hmm.
Where about?
Orlando.
Mickey. Took care of Mickey?
Yeah. Yeah. But I moved here, it's almost 13 years, almost 13 years to the day. And I love it here. And I was a stay-at-home mom for like 8 years.
Most rewarding, toughest job you could have in the world.
Absolutely. But when
How old are your kids now?
8 and 10 and 18.
So they're on their way out of the house.
My daughter, I don't know.
Maybe.
She acts like she's gonna stay around forever.
Hey, whatever. You know what? There's nothing wrong with that.
Yeah.
What I would say is, again, like if you have kids, I'm sure they're in the school district and the system, don't let it be a secret that you do mortgages. So like if you're picking your kids up from school or going to recitals or events or concerts or at the bus stop or whatever, highly recommend you watching like I said to the other lady, watch the prior Zoom at Noons that we've done. A lot of good tips in there. I think I even told Mike Young, like, sponsor folders in your kid's school, put your face on them, your company on them, let them know like you're a local, mom and parents like everyone else. And if anyone needs mortgage advice, you're here to help, right?
Yeah.
Very easy, low hanging fruit. Get a shirt made. I do mortgages, wear it every single time you go to pick your kids up or you go to their games or events or whatever.
Hi, I dropped off something, nobody come back before 1. So I've been sitting in my car.
Hey, no worries, Rick. So Sherry, I think that's your, best advice is to get back into the world known as a mortgage person.
They told me to call you. They just brought it up.
Rick, can you put yourself on mute if you get a chance, please?
But it's ready.
I really need a moderator for this. But Sherry, I think that's like the best advice I can give you is like just go out there, meet as many people as you can, and make sure the company you're working for gives you the back end support. So that way they could help you succeed if and when you do get those deals. Because a lot of people in your area have experienced tremendous rise in value, as you know, firsthand.
Yes.
Airbnb, short-term rental market. I think Nashville is one of the hottest markets in America for that, right?
Yes.
So like really figure out how you capitalize on that and just take each day as a new day to learn. And then before you know it, you'll be very dangerous.
Okay.
you know, but if
I'm
I can help you
actually-
out anyway.
My boys are, of course, elementary school, and they're getting ready to do a big benefit. And I'm trying to figure out what items I'm going to get, but I'm going to do a sponsorship for it. So
Have your bank sponsor it and pay for it. If you're brand new, you should be asking, hey, like, you mind sponsoring this? Like, you mind donating some money? You mind donating some folders? You mind getting t-shirts, sweatshirts, hats, caps, whatever, you know?
yeah,
I think that's very valuable. Being present in your marketplace, especially being a parent, every single parent can relate to you. You can relate to them. They know you, they like you, they trust you. They're going to give you the mortgage business.
okay,
Sound
that's
good?
good advice. Thank you.
Kick butt, all right?
All right.
Who's next? Who's got something? Darlene, I wish I had a contact in Michigan for you. I really don't have many contacts in Michigan. But if anything ever comes up, I'll definitely keep you in mind. 100%.
Okay, Jeff, let me tell you why I am in this business.
You're going to tell me why you're in this business?
You see, on March 13th, 2020, I lost my wife.
Oh, I'm sorry to hear that. Shoot.
That is her photo and my photo.
Man, you're a lucky man.
We are married for 42 years. So she was a 14 years cancer survivor.
Wow.
So
Sorry to hear that.
Yeah. So what happened? It is difficult to come out of that loss. So 14 years I was busy with her, taking care of her in various countries, whether it India, America, London. So unfortunately, after 14 years, we lost her. So I am doing this business to keep myself busy.
Business is a very great distraction, my friend. You know,
Yeah.
it definitely will keep you busy. It definitely gets frustrating. You know, look, at the end of the day, I'm not going to get like spiritual and philosophical on you, but I think you need to embrace the loss and feel, you know, I don't think you should hide behind this very challenging mortgage and real estate business. But look, at the end of the day, go out and help people, and there's nothing more rewarding than that. That's what I'll tell you.
Thank you. Thank you so much.
You're welcome. Hopefully you could join us every Wednesday.
Yeah, no, I'll join. Definitely I'll join.
Now listen, get out of Pennsylvania, man. You bet you should get back to California.
I am going to California on March 24th.
Just make sure you stay there as long as possible.
Yeah, because my daughter lives there. March 23rd is my wife's second death anniversary. After that, I am going there.
Gotcha. Well, good luck, my friend. Be well, all right?
Thank you.
Anybody else have anything before we close up today? Again, like anything specific as far as anything goes, as far as compensation, pricing, support for your bank. I'm still trying to figure out what topic we want to be for next week. Anybody has any questions or ideas as far as next week's topic or wants to know anything, I'm happy to, factor that in. But, look, we're coming out of winter. We're really going out, into a hot market, even an already hotter market, lesser inventory. Just, look, at the end of the day, if you want to play small, that's fine. But, we have an opportunity right now. If you do things the right way, you can play some pretty big ball here. You can get a lot of deals, make a lot of money. But you just got to do it the right way. So like be consistent, stay focused and really just make sure that, you're doing everything possible each day to become more valuable, inside of this space.
Cool.
Anybody have anything else before we close up? I'm just reading Joseph's message over here on the chat. Anybody want to add? Otherwise, we'll close up.
Excellent. Thank you so much.
Appreciate it, Jeff.
Thank you guys for joining. As always, hopefully you guys found some benefit for it. Anahi, Miss Corona, Mr. Corona, would you like to jump on? Oh, there you go. Hi, how are you?
How are you? How are you?
Doing well. What do you think of today's call? Did you like it?
You know what? I love the information that you are providing right now because to be honest with you, I'm just here to learn as much as possible. I'm new in this industry and I just passed my test, but it's so hard for me because I don't have no experience. I'm just looking for a job like a loan assistant so I can get it because it's so hard to just jump in to be a loan officer without experience.
Where are you located?
Illinois, Naples, Illinois.
Illinois. Michael Jordan's house I just saw is for sale for like $14 million. So like you should try and contact the realtor there and try and help get that sold. I think that will like put your career on the map if you did the mortgage for Michael Jordan's house, you know?
But it's so hard to get a job without experience. I just have my, I don't have
Look,
experience.
so look, you're never going to get anywhere with those limiting beliefs, right? You know, use that smile, use that pretty face, go out there and kick ass and get business. Use your strengths to your advantage. That's all I'm going to tell you. Yeah, you know what? If it was easy, everybody would do it. It's not easy. That's why 99% of loan officers fail within the first 6 months of even getting their license or doing this business, right?
Thank you.
I want you to watch every single prior Zoom at noon. I want you to be on here every single Wednesday. And before you know it, you'll have all the confidence and experience you need and go out into your marketplace to do and succeed the way you want to succeed. I can't set your goals for you, but I can help expedite the process and the timing it takes to get there.
Okay, thank you.
You're welcome. Who else do we have here today? Benny Anand, do you want to hop on?
Hey Jeff, how's it going?
Hey, Benny, doing well. Yourself?
Not bad, not bad.
Thanks for joining today. Where are you located?
I'm in the Philly burbs.
Nice. Actually, I said I really want to call. I'm actually closing the deal in Philly today on 3428 North Sydenham Street. Not sure if you know where that is, but that's where the deal's closing.
Oh, okay, it sounds like it's in the city somewhere.
Yeah, it's a little bit north, I think. I was told it's North Philly.
Yeah, yeah. I'm in Lansdale. It's like a suburb of Philadelphia.
Oh, very nice. Excellent. How's business been for you?
It's good. It's good. I this Zoom thing that you're doing sort of caught my eye. I wanted to sort of get on and hear what other loan officers, what other people in the industry are saying, especially as it relates to interest rates. I've lost some deals on the conventional side, but I also have a skill set that's kind of a wider skill set, you know, as I do kind of lending programs, but, you know, on the conventional side, you know, and I've heard it with some other people here, just haven't been competitive on rate. And it might just be the way my shop's set up, but I was just trying to, you know, I'm in that mode where I want to gather as much information as possible.
So are you a banker or a broker?
So on the conventional side, and I'm set up with a few different places, but on the conventional side, I'm with the mortgage banker.
What? Who are you with?
RMG.
PRMG?
RMG.
Gotcha. Yeah, I mean, look, you know, at the end of the day, so do you work for a net branch or do you work for corporate?
I work for a net branch.
Yeah, again, like, look, you know, I'm the first person to tell you this. Net branch rates are always inflated, you know, because the banks gotta make their money. The branch manager or P&L owner has to make their money, right? So you're already operating where two people are getting paid ahead of you. It's tough.
I understand that.
Say that again?
No, and I was saying I definitely understand that structure.
What do you price your loans at right now? Compensation to you?
We are 125 bips on purchases.
All in or just for yourself?
For ourselves.
Okay.
And I opted to take a lower pay on refis during the boom because I just wanted to get as much more business as possible. And I think that number was like 87 bips or so, something like that.
Okay, still relatively healthy. What's your average loan size? Do you know?
I don't know the answer to that question. I did about, on the conventional mortgage stuff, I did about 2 to 3 million last year.
Okay, so what I recommend everyone to do is like really audit your business. You know, you need to know how many loans you close each month, total volume you close each month, and average loan size each month. And if you don't do that, then you don't have a good grasp on your business. That's just my personal recommendation. You know, you need to treat your business like an actual business, whether you know, are just a loan officer or if you're a branch manager or run your own P&L. You know, you guys have to have this information. It's like, you know, every baseball player knows their batting average and knows how many home runs they hit. You know, loan officers need to do the same because that's how, again, you become more valuable and have a better understanding. So, look, sounds like you're on the right track, man. $2 to $3 million is obviously, you know, great, making $15,000 to $30,000 a month ballpark. You know, my forecast for this year for most people are going to be business is going to be off 40% and margins are going to be off 40%. So you could do the math on that. And I would say just plan ahead. You know, refis for the most part, unless you know exactly what you're doing, are going to be dead. You will have some trickle in here and there on the debt consolidation, on the cash out for other investments standpoint. But people are very rate sensitive. They love shopping. And I want everyone to understand that, if you're focused on selling rate, you're not going to be around in a downturn in this market. If you focus on bettering yourself and growing and becoming an expert, you'll survive any market, any conditions. So just really keep that in mind. I can't focus on that enough.
Okay, thanks. I appreciate it, Jeff.
Yeah, you're welcome, Ben. Thanks for joining today. All right, guys. So it's 1:20. If anybody has anything else, speak now or forever hold your peace until next week at noon.
Hey,
I hope everyone.
This is Benny, the stuff you said you're going to put all your information in the chat. It didn't go through, or maybe I'm looking at the wrong chat.
So I don't know how this happened, but I somehow am like, I'm somehow sending Joseph direct messages. So I apologize for that in advance. I think he messaged me directly. First of all, I'm totally incompetent when it comes to technology, and it's kind of sad because I'm building out like a pretty large technology company, but I just put my cell phone number and email, which I can be contacted on both of those directly. Email me anytime. Please don't call me without texting me first, because my phone probably rings 700 times a day. So if you text me, I can store you, and then we can schedule a time to speak. Happy to help you guys all out. So I hope everyone saw some value from this call. Hopefully you guys can feel more confident. I encourage every single person on here and that's watching this to really just take the initiative. Nobody's going to make you successful. You're going to make yourself successful. Find the right people that are going to be a catalyst in helping you get to where you want to be. All right, guys. Everyone have a great day, and I will see you guys all next week on Zoom at noon.
Thank you so much, Jeff.
You're welcome, guys. Be well.